Is the 1% down loan the right loan for you? You want to stay on and watch. If you find this content valuable, you want to hit subscribe and the bell notification so you don't miss future videos. So as you know, real estate is a cyclical market. It goes up, it comes down, it goes up, it comes down, and the loan structure changes, and the supply and the demand, all of those things continue to change. So where we are right now, there's an incentive for buyers because interest rates, although it's come down a little bit, at one point at the end of last quarter, it was like as high as 8%, and now it's around 6%. I've seen some as low as 5.25%, but there's some, rate buy down and all of those things happening to bring the rates down to the low 5s. But the incentive right now is for buyers, for those who have been renting, to be able to purchase again. But here's the thing, not every buyer comes in with 10%, 20% down. A lot of people don't have that money saved up for down payment. So what a couple of lenders are currently doing, according to Realtor.com, is they're offering programs with 1% down. 1% down. So if you are borrowing, let's say, to purchase a $700,000 home, you only need to come in with $7,000. That's 1% to be able to make the purchase. The lender will finance the rest. You may need to have some closing costs that you might be able to negotiate by asking the seller to help cover the closing costs. Whatever the structure may be, this is where we are today. As far as what's happening right now, there's a couple of known lending companies that have come up with a 1% down purchase. Now, that sounds great, right? But here's the thing. You still have to be making the monthly mortgage payment of the other 99% of that financing. That makes sense, right? So that's the dance. So if you have very small down payment, what those loans can do is they can get people who are in the renting situation that may not have money saved up for a bigger down payment to be able to get into the buying market, but they're going to have to be qualified. They have to be eligible with the credit score that's high enough, and they have to have very low debt because their monthly mortgage payment is going to be based on the 99% financing, right? So, for example, if you're looking at a 6% interest rate, you're financing 6% of, if it's a $700,000 purchase, you're financing $693,000 of that money. You can punch in on the mortgage calculator to figure out that number, but you've got to be able to afford the monthly payment, and that's just a mortgage, right? You still have to be able to cover the property tax and the insurance. So it's principal, interest, tax, and insurance. We call it the PITI. So that can add up to be quite a bit. So is that program right for everyone? You'd have to decide. It's a subjective case by case, right? It's not right for everybody if, maybe if you have 3 or 4 kids and you actually need to be able to have a more controlled monthly, you've heard that term. Some people say they don't want to be house poor because all of their money or a huge percent of their paychecks go into paying the mortgage, the principal, interest, tax, and insurance. They don't have enough to eat. That 1% down, the flip side of that is you've got to be able to cover the big mortgage versus the traditional borrowing structure. If you have 5%, 10%, 20%, even better, 30% down, your monthly mortgage is going to be lower, right? So that's where you need to have that conversation with your reputable, experienced lender who could play out the scenarios for you to see what might be best in your situation if you're borrowing in this market. Now, there's another thing that I want to mention. Some lenders that I'm aware of have this program where they give you the ability to be able to refinance their loan, let's say in the next 5 years when the rates get lower, without any additional fees. Because usually when you refinance, you have to pay the refinancing fees to the lender, right? But many lenders that I'm aware of offer this free refinancing feature as long as you originate the loan with them, let's say in the next 3 to 5 years, without any additional cost. So you can actually come out of that higher rate. So let's say if you're locked in at 6% and let's say, 3 years from now, rates are at 4% or maybe 4.5%, you can actually come out of that high rate and go to the low rate without any additional fees as long as you stay with the same lender. So that's another feature that is available. So if you are shopping and you are looking to get financing, you should be asking your lender if any of those features are available for you. I hope this is helpful for those who are out shopping, home buying, thinking about buying, coming out of renting to buying. You might want to also catch this video about how to, renting versus buying situation. I hope this is helpful. Thanks for watching.